the chapter 1 handout, you should have kind of looks like this. Chapter 1 actually has a whole lot of stuff in it. So chapter 1's a pretty heavy duty chapter. They got quite a bit in there. But anyway, this is kind of general information about corporations. You guys may have already gone over this kind of stuff. If you have a finance class or econ class or something like that, you may have already gone over this stuff. But basically, we're going to start off talking about corporations, and then we're going to go into the financial statements down here, which we'll talk about momentarily. But this is kind of a little bit of background about corporations, about what they are. And corporations are, it's a very unique kind of thing because they are actually sort of like a fictitious person. And that they can do anything that you and I can do legally, except for vote. So it's sort of like they made it's almost like another person. It's a fictitious person, but it's a person. Make that a little bit better. That's as bad as the first one. But anyway, they can sue people. They can be sued. They can, they can buy property. They can, do most of the stuff that you and I can do. But they're fictitious person. They're not a real person. They are granted by the state. The state will give you, will allow you to be a corporation. The states will, they fill out forms and all that, put it in there. It used to be a big deal. It used to be a really big deal to get a corporation. You have to go to the state legislature and have them create a fictitious person. It's obviously a lot easier now. But the state, so for instance, in Illinois, you can incorporate, you can have a corporation, and the corporation becomes a legal person. Now, the corporation, because it's a legal person, the corporation can be sued, but whoever is the owner of it generally cannot. So the corporation is actually a person, basically, when it comes to liability. So if you invest in a corporation, if you buy stock in a corporation, you might lose the stock, but if the company gets sued and they lose a lawsuit or whatever, you don't have to pay it. The corporation does. Now, the corporation might go bankrupt and might lose the value of the stock, but you're not going to lose your house, your car, boat, or anything like that. So these are kind of the key thing behind these corporations are that they are a legal entity. It's granted by the state, and there's limited liability. And this allows for companies to be able to raise a lot of money. And some companies need a lot of money. For instance, auto companies. It takes a lot of money to make automobiles. So to get that kind of money, they need to get these corporations so that people will invest in it. If you invest in General Motors, you don't want to be sued for, if they have a problem with a car or something, whatever it is, you don't want to be sued for that. So you may not invest in them unless they're in this corporation thing that you can make an investment with less risk. To put it that way. Articles of corporation are just the rules, whatever the rules are for the. By the way, my hands, they may look very dirty. It's actually not dirt, it's epoxy paint. I don't know if you've ever worked with epoxy paint. It doesn't come off of anything. So anyway, my hands they're not really dirty. Well, they're dirty with epoxy paint. That's what they're. So anyway. All right. Corporation may have one shareholder. You can be a shareholder. You could have a hot dog stand. and be incorporated. And the hot dog stand would be the corporation. And if someone sued the hot dog stand, they could. It's possible the hot dog stand was bankrupt, but he was a shareholder will not. So it is possible to have just one owner, or they could have millions of owners. Owning large companies, Microsoft, Apple, Google, whatever it is, millions of owners and shareholders. Maybe privately held, like the hot dog stand, or publicly traded. And the publicly traded ones are ones we're probably more familiar with, that you can buy and sell stock. Companies you do very quickly, very efficiently. You can actually, buy into a business in 10 minutes, which obviously is very convenient for people. If you're going into business for yourself, it takes a lot longer than 10 minutes. So it's one of those ways you can actually invest in businesses with very quickly. And also, owners do not have to participate in management. They may not know anything about it. I don't know anything about manufacturing cars, but I can invest in GM. I don't need to know about manufacturing cars. GM has people that know how to do that, but I can invest in that company. I can invest in Microsoft, even though I know nothing about computers. So there are some real advantages to this, especially the publicly traded ones, in that they don't always participate in management. You don't need to know management. Now, there is a problem here, though. The owners don't actually, maybe most of the owners, or close to all of them, maybe don't work in the business. That's a problem, because you don't know how the business is doing, right? I mean, if I invest in General Motors, at some point I'm going to say, well, how are they? Are they profitable? Or are they not profitable? What are they doing? So this kind of brings us to what we're going to do in this class. And that is they issue financial statements. And these financial statements are to the owners and to other people. But if you're invested in the company, you want to know how they're doing. Even though, I invest in Microsoft, I have no idea even what they do. Well, I guess I gotta know what they do. But I have no expertise in it. But I still want to know how they're doing. Are they profitable? Are they not profitable? What are they doing? So these financial statements, this is kind of what this whole course is aimed at, is to give to the owners, to let them know how the business is doing. It might be a hot dog stand that they're actually working in it, then they want to know, is my hot dog stand making money? Or it could be the biggest companies on the planet that these financial statements. And they're basically all the same. The financial statements, the idea behind them anyways, is basically the same for all these companies, whether they're big or small. So, well, I'm going to tell you something else too. Like, by the way, you'll see me a lot of times using the highlighters. That's another way to remember stuff. It sounds odd, but humans are one of the few mammals that can see color. Most mammals don't. Your dog doesn't need to see colors. Dog is probably a bad idea, but let's say something like a coyote. A coyote doesn't need to see colors. If it's hunting a rabbit out in the field somewhere, it's not going to see it anyways. The rabbit's probably hiding. They'll probably smell it. So they don't need to see colors. And it takes a huge amount of brain power to see colors. And as far as the rabbit is concerned, the rabbit doesn't need to see colors. The rabbit just needs to hear the coyote coming. It has big ears, and so it can run away. And so animals don't have the need for it. So, but we can see color. Now you don't look at this and say, oh, that's it's an orange marker and it's harder to look at, but it actually uses more brain power. Point being is that if you use highlighters and colored paper and all that kind of stuff, it does help you remember things because it's creating more of those connections in your brain. And it sounds odd, but it actually is. It actually does. Okay. All right, so here are the financial statements that we're going to look at. And there are 3 of them that we're going to look at in this class. Those first 3 we're going to look at. This one we're going to save for later. Statement of cash flows. So these are the 4 financial statements. These first 3 are the most common ones. These are the ones people look at. The statement of cash flow is basically just how did cash come in, how did it leave? It's not that big a deal, but it actually it gets to be a little more complex figuring it out. But these first 3 are very common ones. These are the ones that people usually look at. When they look at a business, these are usually the 3 that are used quite often. Okay, so that's what we're going to do today is start going over these financial statements. Now, most of you have not had this before. Oh, I can remember. Yeah, we're on page 1 of the handout that you should have gotten in the email. So if so this is you should have an email.
I didn't get the email.
All right. Okay. Let me ask this: are you in accounting 330?
No.
Oh, if you're okay. Is anyone in here in accounting 330 that meets on Thursday? Okay. If you are, you don't need to be here. There's an error in my Blackboard. Okay, so you're in the class and you didn't get the email?
Yeah, I'm in the class. I just didn't receive it.
Okay. Let's see here. And what's your name?
Landon Smothers.
Is that the same as Bo Smothers?
Yeah, that's my middle name.
Okay. Let me send you the handouts.
Thanks.
And by the way, my email. Well, this comes out of Blackboard, but my email is not the school is not the best. There's actually a delay sometimes. What we get. Is there anyone else that needs to get it?
There's a lot of people on the chat that haven't gotten it.
Oh.
Yeah, I haven't received it either.
I didn't get it either.
I'm going to send it to everyone again because I apologize.
So do you want us to hold off on ordering the book until you find out if it's the right one?
Yeah. If you haven't done it already, I say yeah. I'll go ahead and do that. So you guys didn't get any email at all?
No.
Okay. Then another thing too is this thing it takes a lot. There's a long delay between I send it and it actually goes through. I have no idea why. That ding here is me getting it, so hopefully you guys got it. I'll wait for a minute and see if. Let me ask, is there anyone that still did not get it? And don't be shy. You're not going to hurt my feelings. Because I can always, I can also make mailings through a different, through my personal email account. I've done that before.
Yeah,
That's
I
it.
haven't got it yet.
Yep,
You
I didn't
don't-
get it either, Mark. Sorry.
Really?
My bad.
No, it's not your bad.
Yeah, same. I can't even access my student email either. But I do Yahoo. I'm personal.
Yeah, I can't even get into my email either.
Really? Well, this is bad. Okay. Okay. Here's a plan B. Can you get into Blackboard?
Yes.
Okay. In Blackboard, actually, this is a good time to go over this. I should have gone over it earlier. For today, just until we get this, just to keep the fun rolling. If you go into Blackboard under course files, you should be able to get all of them. So go into Blackboard. It's about the, oh, what is that? Like the fifth one down. 1, 2, 3, 4, 5. Under course files. And you can get them there also. It is not ideal, but it is what it is. Is there anyone that can't get into Blackboard?
Excuse me.
Mm-hmm.
I think I see that you're recording the screen. Are you going to upload this whole class session when we're done?
I am. I'm going to edit it, but yeah, I'm going to edit out the stuff we're doing now, basically.
Okay. Okay, yeah, I was just asking because I just wanted to fill in like the notes and stuff when I didn't have the handout.
Yeah, absolutely, absolutely. It'll be on. It'll be on there, and that goes for any of these classes. It takes about a day to get it in there because I usually edit out some of the stuff, and then it has to render it, and then it has to put it into YouTube, and YouTube renders it and puts captions on it, and then it's available. But it usually takes a little bit of time, but they're always put up, and they're always recorded. So, and if you do have to miss a class or something like that, you don't have to tell me about it or why or anything like that. Just know that it's there, and you know, let's go back and look through it. Okay, is there anyone that could not get into Blackboard? A better question: anyone who cannot get the handout or the syllabus in Blackboard? Okay.
I still think I can't get to where the files are on the Blackboard. I'm still I'm on Blackboard for announcements, but I don't know because once I click on accounting or anything, it doesn't bring me to any course files or nothing. Or maybe I'm in a totally wrong place. Who knows?
What accounting classes does it show? Or it doesn't show any?
Say again?
What accounting class shows up there?
It says under RU courses is accounting 210. But yeah, it says accounting 210-10 accounting 403-10.
And you can't get into it? Yeah.
I can't either.
I click on it. All it brings me to is I click on it is the announcement says please join the Zoom meeting link at 6, and that's the only thing I can see.
That's exactly what I have.
Do you guys have this in your other classes, or is this the first one?
This is the first one.
That is odd. I never. So you can see the announcement. So this. I don't know how to get. Okay. Well, here. I tell you what. In the chat. Let me get out of this. In the, if you want to, you don't have to do this, but in the chat, if you want to private me your email account, and I will send it from my account. And this is a new one. I never had this happen before. It doesn't surprise me. My I've sent stuff out of Blackboard and stuff that hasn't it either doesn't, or even my regular account, it doesn't arrive, or it arrives quite literally hours, if not days later. And you'll look at it and you think you're going crazy, but it'll be a new email that pops up and you look at the date on it, it's 2 days ago. All right, so let's see here. Add in. Is there anyone else besides Russell and Nicholas? Okay. Okay. So anyone else? So I've landed Nicholas and Russell. Anyone else need to get copy? Okay. Let me see if I can send this. Let's say. Again, I do apologize for this. This is not the way it should be. Attach. How did you guys get to the meeting?
Your announcement.
Oh,
You just click on the Zoom link in Blackboard.
It goes right there.
oh,
Yeah, this was the whole first semester, just technology problems.
yeah. No, you have my sympathy. I've actually been round and round with the text on this because yeah, and I remember talking to one of them one time. And they said, "Well, everything you sent is there," and they showed they had. I think I sent out about 15 emails, and I think they had 3 of them. They thought that they had all of them. I said, "That's not even close." I mean, that's and it was really random. It was the people that actually got it were. It wasn't like, oh, these 3 that were in the morning went through, and the rest of them didn't. It was all during the day, so it was very strange. Okay, did you guys get it? Anything? No.
Yeah.
You got it? A better way for me to ask that is there one that did not get it? And again, don't be shy if you didn't get it. Let me know, and we'll try something else. I can send it through my personal email too. Okay. So, is there anyone that does not have the handout? How about that? Okay. All right, well, a few little stumbles here. Let's get back to the boring stuff. Okay. All right. So, and again, just say as no. So, if you're doing this, you don't need to print it out. Obviously, if you can just pull it up on your screen if you want. You can type it in if you want to, to fill this in. So as we go through here, it's good to do it by hand. But if you don't have a printer or something like that, or you don't want to use, burn up the paper and the ink and all that, you can type it right in. Okay, so on page 2, and by the way, so these are all going to get turned in. So if again, if you want to type it right in there, that's fine. If you want to print it out and then write it in, I'm going to write it in just because it's I'm doing it old school. Okay, so on page 2, we have our the 3 financial statements that we're going to take a look at are income statement, statement of retained earnings, and the balance sheet. So those are the ones that we're going to work with. And I'm going to start out with the income
I
statement.
opened up a claim for the book that I bought today.
I'm sorry? Okay. Right. So we're going to start out with is the income statement. Now, the income statement is really quite a basic. It looks like this. It really is just you compare money that comes in and money that goes out. Hopefully more money comes in than goes out. That's really all the income statement is about. So for example, if I mowed a lawn for $20, I used $3 of gas. How much did I make? Now, most of you, do this in your head. I mean, $20, you use $3 of gas, you made $17. That's all it is. That's all the income statement is. The money that comes in, $20 came in. Money that goes out, $3 went out. You made $17 of profit or of income. That's really all it is. That's the income statement. What came in? So this money that came in, that's money that went out, this was left over. So that's the exact same thing here. Now, in accounting, we have specific names for the money that comes in. We're going to call those revenues. So money coming in is going to be a revenue. Money going out is going to be called an expense. So the idea is exactly the same. Money coming in is a revenue. Money going out is an expense. So in, out. That's all it means. So revenues and expenses are we're going to use that. Those are the titles we're going to use on our income statement. But they really just mean what comes in versus what goes out. That's all it means. And you know, if I mow the lawn for $20 and I use $3 of gas, how much did I make? $20. Subtract out $3 I spent on gas, I made $17. That's all it is. Okay. Let's go to the problem. Okay, so on the first page here, so these are all the accounts that we had in here. And we're going to go down until we find revenues. Right there. So the revenue. Oops, a little crazy there. So revenues are 54,000. So that's money that came in. And the expenses. Oh, and I should color coordinate these. Revenues. The expenses are these other two. So rent expense and salaries expense. So down here we'll have oops. Okay. So rent expense is 9,600. And I'm going to put that in as a negative. That's money going out. You know, kind of like the gas that went out. Okay, so we have and salaries expense. So this is the money that came in. This is the money that went out. And our income will simply be the difference between those two. This came in, we paid out those amounts. How much? That's Mr. Calculator. Oh, turn the calculator on. If you're I'm not really tech savvy, but if you turn the calculator on, it just works. All right, so 54,000 minus. So 24,600. So this is how much money they made in the period. Now, I'm going to talk a little bit about what I'm talking about when it comes to revenues and expenses. It's sort of like this. separate this out. Okay, so let's say that we have a year. Let's say that they use a regular calendar year for most companies will. So during the year, January, February, March, and so all the way up. They start out the year, they have revenues of 0, and they have expenses of 0. Now, as they start getting revenues in, whatever they do for money, mowing lawns or selling stuff or whatever it is, these will start going up. So they'll make some sales in January, February. So this will keep going up as years goes on. The revenues keep increasing. And same thing with the expenses. They pay their employees, they pay for gas, they pay for rent, they pay for whatever. As it goes on and on and on until at the end of the year, they come out to whatever they have. I think it was 50, I can't remember what we had on there, 54, whatever it is. So, at the end of the year, it'll be the total. Now, let's say this is 2020. When they go to the next year, they start back out at 0. They reset everything back to 0 and say, okay. These were all sales and expenses that we did in 2020. In 2021, we start back at 0. So we'll have, this thing is document canvas locking me from trouble. And so they'll start out again at revenues, 0, expenses, 0, and again, so as the year goes on, so each year they start out at 0, and then as it goes through, and then they'll see how much profit they had for that year. Then these get turned back to 0. You start 2021. These were all sales and expenses, whatever they were. Just numbers, and then start anew in 2021 and see if they're profitable in 2021. So the revenues expenses are generally for only 1 year, and they get reset at the end of the year, so that each year you'll know if you're profitable for that year. Okay, so these are sort of like these would be a year end. I don't give a year here, but if I gave a year, then you would the next year these would start out at 0, and as year went on, we would go ahead and add them up. And again, hopefully what comes in is more than what went out. Okay. Let's go to page 3. All right, so this was the income statement. I should have highlighted that. By the way, it says heading omitted. You might say, well, what is that? A heading usually just says what the corporation is. So this would be the Zephyr Corporation, what year it would be, and that kind of stuff. I just omitted it because for space. Adding a bunch of lines here doesn't help the spacing here. So anyway, if you see heading omitted, don't worry about that. It's just it's basically the same space. We didn't put in the company name and all that kind of stuff. Okay. Statement of retained earnings. Statement of retained earnings is sort of like the owner's piggy bank. All right, so let's make a piggy bank. Piggy bank. Oh, he needs years. Okay, so here's our piggy bank. And the piggy bank is sort of like what retained earnings are. Okay, so when we make income, it goes into the piggy bank. You know, this is money coming in. We take the money, it goes into retained earnings. And so the piggy bank is bigger. And then when I say it's a piggy bank, it's sort of like a piggy bank for the owners. Now, we pay money out to the owners, we pay them out their dividends. And these are paid to the owners. So the company makes money, it goes into retained earnings. These are earnings that are kind of held there for the owners. When money gets paid out in dividends, it's paid to the owners, and the piggy bank, you know, what's in the piggy bank is smaller, basically, right? So this is money coming in to the piggy bank, this is money going out of the piggy bank. Now, if the piggy bank's empty, you can't pay out any dividends. If there's nothing in the piggy bank, you can't pay out anything from the piggy bank. So retained earnings has to have something in it to pay out dividends. All right, so it's kind of like a, you know, a holding thing for the income that they make. So let's go back to our problem. Okay. Well, looking at our accounts, there's one account here that stands out as, hey, I bet you that goes in the statement of retained earnings. That's this account called. Yep, retained earnings. So this is the beginning amount that we had in the piggy bank. So our piggy bank had $30,000. So put that in our statement here. And this is the beginning retained earnings. So beginning $30,000. So the piggy bank has 30,000. And that's just from the, this has to be given to you. Oops. Now, remember though, we also made this income of $24,600. So that is going to get added into our piggy bank. So our net income will get added in piggy bank. So sort of like this, 24,600 went in. Oops, can't see that. So the piggy bank started out at 30,000, added another 24,600, so more money in the piggy bank. But we also paid out dividends. So these are dividends. These are paid out to the owners. So the owners took some money out of the piggy bank. The owners took $2,400 out of the piggy bank. Okay, so we're going to subtract out. Again, that's just coming right from something you can't see. Coming from. So here, it's at 2,400.
Do businesses have to declare dividends being taken out?
No, if a company's doing poorly, they don't have to pay out dividends. So they can say, we had a bad year, we're not paying out any dividends. If they do declare dividends, then they must pay them out. So they're only legally on the hook to pay dividends if they declare them. So yeah, so the companies do not have to pay dividends. And then they get to say they have. Actually, General Electric paid dividends for every year for 100 years or whatever. They just stopped it because they're doing poorly. But yeah, so they don't have to pay them. But if they do declare them, and the board of directors declares the dividends, if they do declare them, then then they're legally obligated to pay them. Okay, so this will give us our ending retained earnings. All right, so it's 52,200. So this was left in our piggy bank. So the owners, 24,600 went into the piggy bank. They took out 2,400. So the amount of money that's still left in the piggy bank would be the 52,200. That's what would be left in the piggy bank. So this is sort of like the owner's money that they have not been paid out to them. And this is the most that can be paid out to the owners from the piggy bank. For instance, they could not declare a dividend of 55,000. They don't have 55,000 in the piggy bank. So that's the most they can declare. Okay. Balance sheet. The balance sheet has three different categories. Assets are anything that has a value. So anything that has a value is an asset. Cash, cars, equipment, buildings, land. These are all, these things all have a value to them. So anything that has a value is an asset. Liabilities are what you owe to other people or other businesses or whatever. So this is what's owed to whoever. It could be your phone bill, it could be the rent payment is due or whatever it is. These are things that are owed to other people, or other businesses. And down here, this is what the owners have. You know, this is the owners, with how much of it of the company they own, basically, is down here. So this, anything has a value. Anything that we owe to other people goes over here, and anything that is basically owned by the owners will be here. So let's see how this thing works out. Let's do something here. I'm going to this back. Okay. So things that have value. Cash obviously has a value. Equipment has a value. Accounts payable, this is owed to somebody else. And someone else could be another business, could be a person, it could be a bank, it could be whatever. So this accounts payable, so this is not an asset. This is money that we owe to other people. So actually, these first two are going to be the only ones that are assets. Anyway, I'll talk about the stock here in a second. So you may look at that and say, what about the stock? This is actually what the owners have. We'll talk about it in a moment. Okay, so the total assets are I think it's 60,000. Better use the calculator. Just to sure. 60,000 in assets. All right, now, so okay, on this side of the balance sheet, we have liabilities, and the liability that we have here is what do we use? Accounts payable. So this is owed to somebody else. This is going to be a liability. Doesn't say who we owe it to, but probably doesn't matter right at the moment. But we owe somebody $3,000. Could be several places. But anyway, so we'll put accounts payable. And payable means we have to pay it to somebody else. Cheat a little off the edge here a little bit. And that's the only liability that we have. If you only have one, you don't need to add it up, but sometimes it's good to 3,000 plus nothing is, well, it's 3,000. So this is the total amount that we owe to somebody else, or the business owes to somebody else. Okay, now the owners, and this is where it gets a little bit tricky. This common stock was issued to the owners. It could have been issued 50 years ago, but the owners paid $4,800 to the company for this common stock. So this common stock is actually part of what the owners have down here, common stock. Oops. Of 4,800. Now, the owners still have one other thing. And the one other thing that they have is looking for, let's go, we'll go with pay. They still have these retained earnings. You know, this is the owner's piggy bank. You can't see what I just did. I'm sorry about that. The retained earnings. 52,000. That is owned by the owners. That's their piggy bank. So our ending, I'll abbreviate this, retained earnings. $52,200. And so this will be the total equity. These two together. So the 4,800, that's what they have, that's what they paid for the stock, the owners. Plus the owners have a piggy bank worth 52,200. So the owners will have 5,700. Total equity. That. If you add those two together, the total liabilities and the total equity comes out to 60,000. So C equals this other side. They balance. Oops, can't see that. So these two sides equal, they balance. So the assets will equal the liabilities plus the equity. Now, you might look at this and say, well, so what? And what does this tell us, really? Well, here's what it tells you. It tells you that you have all these assets. You have 60,000 of assets. These have to come from somewhere. 60,000 of stuff just doesn't appear out of nothing. So the question is, okay, you have 60,000 worth of these assets. How did you get it? This side tells how you got it. You borrowed 3,000. So of the 60,000, 3,000 is borrowed, and the owners kicked in 57,000. So, 3,000 of it was borrowed, 57,000 the owners kicked in. It has to come from one of those two places. Either you borrow the money or the owners have it. But that's how you get your assets. So the balance sheet explains how you got your money. There's one other thing about the balance sheet bill that I'm going to talk about for this now. And I think I'm going to call it a day after this because I think we need to get some of these technical issues cleared up on that. But if you think about this back here, when we talked about the revenues and expenses, they go on for the entire year. The balance sheet is only at the end of the year. That's a C. So the balance sheet is only at the end of the year. So it'll be at December 31st. That'll be the date for the balance sheet. This cash can change daily. You make a sale, you pay for rent, you do whatever. This cash, but at December 31st, you say, how much cash did you have on December 31st? So it's for a point in time. It says, okay, on this date, how much cash did you have? How much equipment did you have? The next day, maybe you bought some more equipment or sold equipment or whatever. But on this date, how much did you have? So this is sort of like a snapshot at the end of the year. Here's a snapshot of where the company stands. This is what they have their assets. This is their liabilities. These are what the owners have. Those two balance out because it explains where these came from. So this is only at the last day of the year. Any questions on that? Now, if this seems strange and foreign language to you, it should. The first time you've probably seen this stuff. Yeah, so if if it seems strange or whatever, it should. This is not usually. Some of you may have had it in high school. Most of you probably did. So if you didn't have it in high school, this probably seems very strange. But anyway, we're going to do a lot of these, and we probably won't have the first test on this, and probably not until week 3. I should say probably. We won't have it until week 3. I'll say it more direct. But I think we're going to call it a day. And next week, I think we'll go through the rest of it. Hopefully, we'll get these email and Blackboard things figured out, because this is really not, it's not helpful to not have these things. So any questions on the handout? Let me go back to it. Oops, I thought I did. Sorry. I'll learn how to use these computers one day. Any questions on any of page 2 and 3? And we're going to do more of these. And you have to actually, if you kind of look through here, we're going to do more of these as you kind of see where we're going with it. But is there any questions on these first 2 pages? Page 2 and page 3, I should say. Okay, well, you're not going to turn this in, so hold on to this. I'm not going to assign any new homework for next week. But hold on to this. We're going to continue with it next week. So next week on Tuesday, we'll start in on problem number 4. And hopefully by then, all of these issues with your email, those of you that are having trouble with your email and your Blackboard accounts, do me a favor and contact your advisors if you can. Use your personal email account, or call them or whatever. But they got to figure this out, because this is not. No, I did it again. It's not fair to have you guys get caught behind, the first week of class or whatever, just because of some technical issues. And if you contact your advisor and it still doesn't work, go ahead and contact me, and I'll contact the dean and see what they can do. But contact your advisor first. They're probably more familiar with this kind of stuff than I am, and probably more than my dean is. But if we need to get involved, we'll get involved. So so contact your advisor, and if that doesn't work, then go ahead and contact me. I'll put it here in the text messages. Let me see here. I'll give you my personal email account, because if you guys can't get into, if you guys cannot get into Blackboard, you may not be able to get to it. Well, here, I'll give you again. No, this is in the it should be in the yeah. So if you want to just take a screenshot of this or whatever, you got a little cut off here, but that's my email. I think it's a Comcast email. There's my school one, and my cell phone number is there too. If you want to call me or text me, or whatever, that's there too. But see if we can get this figured out. You're going to want to get it figured out anyways, because you got other classes this week, obviously. Any questions on that? Okay, so just to reiterate, so we're gonna, I know you guys wanted to see the piggy again. All right, so just to no homework for next week. For this week, we need to all get get access to Blackboard, get access to the email. And